Welcome to topic 6, Statement of Cash Flows, part 2. In the part 2 video today, we're going to have a look at the 3 components of the cash flow statement in a bit more detail. So that's your operating activities, investing activities, and your financing activities. So just to give you another bit of an overview of our cash flow statement. So our cash flow statement, it's been required for some time by the accounting standards, dating back to 1991. One of the good things about the cash flow statement is that it is a lot more difficult to manipulate this particular statement because it does describe movements in cash. So cash is cash. It's either you got the cash or you didn't get the cash. It's cash in or it's cash out. It is really quite hard to manipulate, and your bank statements back it up all the way as well. So 3 major sections, as we know: operating, investing, and financing. So with your operating activities, what's included here are your cash flows from your normal operations. So these are things that come through from your revenues, from your expenses, from your current assets and your current liabilities. Your investing activities. So here we include items like cash payments to acquire non-current assets and also cash receipts for the sale or disposal of non-current assets. It can also include things like shares. Okay, if we hold shares in another company, then for an investment purpose, well, then that forms part of our investing activities because the shares that we own in another company are a non-current asset to us. Okay, so your investing activities, a type of accounts that you're dealing with here are your non-current asset accounts. With our financing activities, this is all about the financing of the business, so the long-term financing of the business. So we're looking here at debt and equity sources, so share issues. So us as a company, did we issue shares? Because if we issue shares, that's going to result in cash inflows. Borrowing, did we borrow money? Are we repaying debt? Big thing, excludes short-term credit. Okay, so we're not after short-term liabilities here. Those short-term liabilities, your current liabilities, they go back up to operating activities. So your financing activities, the account types we're interested in here is your non-current liabilities and your equity accounts. So if you can really, even if you've got to write it out in a little table, but just be very clear on the account types that relate to the different categories, then it's really going to make your life a lot easier when you're prepping and preparing a cash flow statement. So looking at operating activities now. So again, includes things like cash received and paid for the regular business of the firm. So say if you're selling goods, maybe you're providing services, regardless of which one it is, it's like your day-to-day activity. So cash going in and out through that is going to come in here under our operating activities. So transactions reported in our income statement, so our accrual basis, are adjusted to a cash basis here. Okay, and our in regards to decision making, users are enabled to assess the entity's ability to generate cash, to meet short-term obligations, continue as a going concern, in other words, they're not going to fail tomorrow, and also expand. So operating activities, that's what we can use for decisions and evaluations like what you see here. Examples of operating activities, we have cash inflows can be from receipts from customers. It can also be interest received is what I was after. Cash outflows from payments to our suppliers and to our employees. Can also be interest payments, taxes paid as well. Investing activities. So investing activities, non-current assets, that's the theme of this activity. So the acquisition and or disposal of non-current assets, that is it. So it includes, say, selling or buying property, plant and equipment, and also other productive assets. So buying shares, so we buy shares in another entity, or it could be that we loan money to another company as well, okay? Because if we're the one loaning the money, that company is becoming a non-current asset to us, okay? In terms of decision making, what decisions can we make from investing activities? Well, it allows our users to analyse future directions of the entity by studying major non-current asset acquisitions and also disposals as well. Okay, because remember, your non-current assets, that's your longer term stuff, your longer term investments, whether it's an investment in shares or whether it's an investment, say, in some assets that are going to generate you some wealth and bring some income in. So some examples of cash inflows from our investing activities could be we sell some property, plant and equipment. Could be the receipt of some loan repayments where we have been the lender to someone else. It can be cash outflows from purchasing property, plant and equipment, or we're lending money to other entities or other companies. Moving on to financing activities. So financing activities includes your non-current liabilities and your equity account types. So again, be very clear on those account types because it's going to make things a lot easier for you. So our financing activities relate to changes in the size and or composition of the financial structure of the entity. It includes both equity and borrowings, in other words, debt. So like I said, we're looking at equity and we're looking at non-current liabilities here. In terms of decision making, our users will be able to identify changes in debt and equity. So they're going to be able to see if you've just borrowed some more money. They'll also be able to see if you're issuing some shares. So you're raising funds by issuing shares. Some examples of cash inflows can be we borrow cash. So we go to the bank, we borrow $200,000 cash. That is a form of inflow. The owner might be contributing some additional capital in cash. Okay, so that's say if we're a sole trader or we're a partnership. And if we're a company, then we can have an inflow which are proceeds from issuing some shares. Cash outflows can be because we've repaid some of our borrowings in cash. It can also be cash drawings by the owner. Again, that's if you're a sole trader or a partnership, then we would have drawings by the owner. If we're a company though, then it would be, say, payment of dividends would be a relevant outflow for us. All right. So just to review here with loans, because loans can be a little bit confusing, you've just got to be very clear on who the lender is. Because who the lender is going to determine where it goes. So what section do we put a loan in? Well, if the firm is the one lending the money, then this appears in the investment section. So your investing activity. So if you, as a business, you are the one loaning money to someone else's business, you are the lender. So therefore, when you loan that money to that other person, or that other entity, I should say, the outflow is the amount of cash that you have loaned them. The inflow to you is when they make repayments back to you or they repay that loan, whether it's in installments or in full. If, however, if you, again, remember we've got that business hat on, if you as a business are the one borrowing money, then that's going to go into your financing section because you're the borrower. So the inflow for you is the money that you're borrowing. The outflow is the money that you repay back to the lender. Okay, again, whether you're making smaller repayments or whether you're paying back in full, those repayments that are going out are the outflows in that situation. Okay, so one thing with, I guess, a big important point with cash flows is it's all in terms of inflows and outflows. So is money going away from you? Is it flowing out from you in your business, or is that money flowing back in to you? So really think of it in terms of money's going out, the money going in, and what does it relate to? Okay, so also in terms of your classifications, in terms of which section you're dealing with in the income statement, okay, you've done your transaction analysis, so you've done that in topic 3. So you know there's 2 things that you're going to be identifying. So to know if something belongs in a cash flow statement, you want to look for one, something that involves cash. So you've got your 2 things. One thing should always be cash if you're even thinking about putting it anywhere near a cash flow statement. So the number 2 item, okay, the number 2 is what is determining, does it go in operating, investing or financing? All right, so if it's cash sales, your number 1's cash, and your number 2 is the revenue from the cash sales. So the revenue from the cash sales, we know we'll put it into an operating activity. Okay, so you've still really got to hold on to all that knowledge about how do I classify things, and also how do I analyze transactions. Again, you still need it all now, even here in topic 6. So the next video that we're moving on to, we're going to have a look at identifying non-cash items, because that is also super critical with cash flow statements, because all we want to know about is cash. We want to make sure that you know how to spot something that isn't cash, so that you leave it out and don't put it anywhere near this particular financial statement.